Hi, I'm Steve Clapham, and welcome to the Behind the Balance Sheet podcast on video. I don't know what they're called. I've called a video cast. I'm joined today by Jared Bibler or Bibler. I don't
Bibler.
know, Jared. Are you
No,
Bibler or Bibler?
I'm Bibler.
You're Bibler. So he has written this amazing book called Iceland Secret, which I was recommended by Russell Napier, who is our mutual friend. And it was like a thriller. It reminded me of that book, Bad Blood, about Theranos. It's in the same genre. So I was happened to be talking to Jared. We share the same publishing house, the lovely people at Harriman House. And I said, why don't we talk about your book on the podcast? So here we are. And let me just paint some background because not everybody will be as familiar with this Icelandic story. So you've all heard of the global financial crisis. It was obviously very painful in the US, but it was very painful in everywhere, in all the developed economies, almost everywhere. But not everybody would know that the country which was worst hit was Iceland. And all three of the country's major privately owned commercial banks collapsed in late 2008, following difficulties in refinancing their short-term debt. A run on deposits in the Netherlands and in the UK, where they had subsidiaries where they took large deposits. This banking collapse in Iceland was the largest experienced by any country ever in history, at least relative to the size of the economy, which is staggering. Mm-hmm. And of course, it led to an economic depression in the country from 2008 through 2010. In the years running up to the crisis, three of these banks, Kaupthing, Landsbanki, and Glitnir, by the way, the Icelandic pronunciation is not my sphere of expertise.
You so can leave that one to me, Steve.
Doubtless correct me. But I mean, these banks grew like weeds. They multiplied in size. And of course, anybody who's got any understanding of finance knows that when you see banks growing like crazy, it's usually a sign of a problem ahead. And like Northern Rock, these three banks used shorter term capital. Mm-hmm. And as the global financial crisis unfolded, there was a credit squeeze. You couldn't borrow. There was a shortage of credit. And because the Icelandic banks were seen as very risky, they had trouble rolling over that short-term debt. So that then resulted in a sharp depreciation of the Icelandic krona, which, fell very, very significantly. And, it also meant a huge increase in the debt. So Iceland's external debt was 9.5 trillion Icelandic krona, which is about 50 billion or more than $50 billion, which was more than 7 times its GDP the previous year. And assets of the three banks at that point were 11 times the national GDP. So the central bank couldn't be the lender of last resort during the crisis. So starting with the smallest one, Glitnir, blew up 2 weeks before Lehman. And then the three banks were liquidated and split into old bad banks and new banks. UK depositors, which I imagine were a major source of finance for the two larger banks, were made good by the UK authorities to the tune of 4 billion sterling. So at the time, that would have been $8 billion, but Iceland didn't repay the debt. Icelandic government introduced capital controls, the currency collapsed, the market cap of the stock market fell by 90%. And the IMF and various Nordic countries lent Iceland $5 billion to finance the budget deficit. These capital controls were lifted in 2017. So I'm joined by Jared, author of the book, which is called Iceland Secret, the Untold Story of the World's Biggest Con. And Jared ended up as an investigator, Iceland's financial regulator. So Jared, welcome, and tell us a bit about your background and experience before you arrived in Iceland, and how come a man from Maine ended up in Iceland?
Thanks so much for having me on, Steve. It's a pleasure to be here. I'm actually from Massachusetts, not Maine, but Maine used to be part of Massachusetts, and we gave it up in the 19th century, I guess. But anyway, so I was looking for a little adventure when I turned 30, and I wanted to do something different, and I wanted to try living in a different country. And Iceland was pretty close to Boston. Depending on the winds, it could be even a 4-hour flight from Boston up there. And so I had fallen in love with the country as a tourist, actually, and I stumbled into an interesting opportunity to do what I had been doing in Boston and New York, which was at that time I was a software consultant. I was building the back office for one of the biggest Wall Street banks. And that was a very cool project, but kind of a burnout project. We were working every weekend, all weekend, and so on. And I found on a vacation in Iceland, I found the chance to do something similar there. So I got a job at this Icelandic firm, which is mentioned in the book, and we were doing the back office software for these banks that you already mentioned, that were already in the early years of their growth spurts. They were doubling their balance sheets every year, so or roughly every year. So when I got there, the the level of liquidity in the economy was staggering, and you could see the signs of that everywhere. It was a huge property and construction boom. There were private jets going over, hourly seemingly into the Reykjavik city airport. And most importantly, my coworkers were just so excited about the stock market. Everybody was talking about the stock market. At that point, the stock market had gone up, I think, 50% the year before in value, 50. And
that's good for getting people interested. Yeah.
Yeah, and it did that for several years, 50 or 60% annual returns. Between the beginning of '04, I moved there in late '04. Between the beginning of '04 and the middle of 2007, the market went up 330%. And in the collapse, the market actually dropped 97, as you alluded to. So
right. Okay.
the market was wiped out. And I always found the market's behavior strange. And I would ask my coworkers, why are these bank shares going up so much? What's behind the growth? What are the fundamentals? And nobody cared about those things, the same as nobody cares about those things in crypto today. So that's the story there. I ended up working in one of those banks as an asset manager. They were so desperate for talent, they let me, a guy who'd been making asset management software, they let me jump over and manage money. And so I did that. And the first part of the book,
what did you have any training? I mean,
No, but I had more experience than most of the people around me.
I mean, you didn't have to pass any exams, or
no. On my own, I started the CFA at that point.
All right. Oh, well,
but nobody
helped you.
Nobody around me was doing that, and I was trying to get people interested in that in the bank, and they said that's just a waste of time. Most people, I mean, some people had started it also, but very few. No, but just someone who understood the basics of markets put me quite a bit ahead of a lot of candidates, I think. But I was in there for about 2 years, and what I saw was increasingly making me sleepless. The way we were handling client money. We could talk about that if you want, but I finally quit, and my last day was Friday, the 3rd of October, 2008. And as you said. So Lehman had collapsed on the 15th or the 17th of September. Friday, the Monday before, the Icelandic government had announced that it was going to nationalize Glitnir, and that didn't go over very well. And then the following Monday, the Monday after I quit, Glitnir collapsed. What they did is they passed a emergency law over the weekend, which would allow the banks to basically turn their licenses over to the Financial Supervisory Authority and to wind themselves down. So they did this in one weekend, and the following week, all 3 banks collapsed. They had a combined balance sheet at collapse of around $180 billion US. So they were quite large each. And as you mentioned, they were 11 times bigger than the country's annual GDP at that point. And that was a really dark winter. That was... we should really not gloss over the human cost of this collapse.
No.
I can talk personally, and I'm not complaining about this because a lot of people had it worse, but I mean, we lost our house and our savings were not accessible for many months. And I had quit thinking that I would go to one of my clients, a pension fund, but there was nobody hiring once the banks collapsed. So it was very difficult time that winter, and people were out. Go ahead.
No, I suppose the pension fund find it a bit difficult if the stock market was down 97%.
Well, the reason it was down 97% is that the three banks basically had swallowed the market. Their shares dominated the market because they were so much bigger than even the country, as we said. So when those three banks collapsed, I think they made up about 80% of the market. There was a couple other investment companies and so on. So the market just cratered. Yeah, and then this drove people out on the streets. People were fuming mad. They knew that they had been stolen from. They knew that it had to do with criminality in the banks. They didn't know what it was, but they were angry. They were out on the streets. And the winter in Iceland is not pleasant. It's not that cold, but it's dark. So if you want to go out and protest in front of Parliament before the session opens, you're going out in the dark because it's dark until almost lunchtime in the winter.
How many hours of daylight in the winter?
I mean, you don't really have any hours of daylight. If it's a clear day, you might see the sun like squeak over the horizon for a couple of hours in the middle of the day, if it's clear. But in Reykjavik, it's usually rainy. So then you just have a vague sense that it's a little bit less gray, for a couple of hours.
I mean, I know Boston's weather isn't the best in the United States, but I mean, you chose to go to this place.
Yeah, I know. Well, Boston is like tropical after. Well, actually, Boston is a lot colder. The winters in Boston are much more brutal in terms of temperature, or can be.
A lot of snow, yeah.
Reykjavik is a lot of rain and dark.
It sounds like an even more miserable version of Glasgow.
I think probably, yeah. So, but in those conditions, people were outside filling the square in front of the Parliament every day. I think there was not a day where there wasn't a protest from October, from the collapse in October through the winter, because the politicians who had overseen this nightmare, they were sticking to power. The head of the central bank was the former politician who had privatized the banks, had become the head of the central bank, as he said he was retiring from politics. So as a retirement gift, he got the head of the central bank. He kind of clung to power for about 6 months as well. Maybe it was 4 or 5, I can't remember. It was a very dark winter. And then I was hired to, I had applied to the regulator. I thought maybe they would need someone with some experience. And I was hired. They said they needed one investigator. In the end, they decided to hire 2 of us, but there was like 190 applicants for this role. And they said,
just put it into context. What's the population of Iceland?
At the time, it was around 300,000.
300,000. Okay. So,
and I remember later I benchmarked the size of the Enron task force, which ran for several years and was hundreds of people in the U.S. And each of these banks was about the size of an Enron on their balance sheet. So we should have had like 1,000 people on this investigation team, but we had like me. And then there was they had created, under public pressure, they had created a special prosecutor, which was really kind of, in a way, a miracle that was done. But that was the main thing that made the criminal part of this move forward. But it was very stressful for me the first week or 2 of this investigation work, because they just put me in front of an empty desk. They said, well, you have everything you need. There's your computer, there's your phone, go investigate the crisis. And
so, I mean, this is like, I'm really interested to know how you started. But before we get to that, you were working for an asset management subsidiary of Landsbanki.
That's right. Yes.
Well, did you know what was going on when you were there, or were there any signals that you, now looking back, like, oh, I should have realized that was going to be a problem?
I think we'll get into probably hopefully more the share market manipulation, which was going on, which to my mind is one of the core pieces of the crime, that financial crime that underpins this boom. But I didn't have any idea about that when I was at the bank. And I was,
I mean, did it look just like a normal? I
no,
mean,
I
apart from
mean,
the fact that they, had somebody who was totally unqualified helping them run their money. I mean, which obviously is, you can understand the circumstances, but I mean, it was a
yeah,
pretty
but I was,
straightforward operation.
um, well, I had never worked in asset management, so I haven't since, so maybe it was fine, but I was shocked by, for example, take some examples. Um, we had an in-house hedge fund, but the bank had no ability to. They didn't know what a short sale was of stock, and they had no ability in their systems to reflect or process this. So I had to. My specialization actually in Wall Street was security settlement, so I knew this stuff very well. So I had to like hold their hand through the back office people how to book and process this. But they would routinely do things like, in fact, we had a short sale, and the money had come into the bank for the sale, and they had not segregated it. They put it back in the back in the cash account of this investment fund so that it could be spent. Um, they I just found a world that was kind of held together by Excel spreadsheets. Um, but what was more troubling was the ways that we misused, the ways that we basically took client money from smaller clients and used it to benefit or to entice larger clients into the funds. That's the stuff that kept me up at night.
All right. So you were aware that there was all wasn't well. So you get in on your first day, and at least you got a computer. I mean,
Yeah, yeah.
and a notebook. Where did you start?
Yeah, so I didn't know where to start. And the thing that I did was, for the first day or two, was that I read, one thing the regulator had done, which was smart. They had hired, right away as the banks collapsed, they had hired some of the big four auditing firms. It was the three that are not Deloitte. I don't think Deloitte was one of them, but the other three, they had each taken a bank which they did not audit, and they had been asked by the regulator to look at all the any signs of suspicious activity as the banks were collapsing. They were looking for people moving money out of the country, big insider trades and stuff like that. And so I started reading those reports, which were interesting because this is now 6 months after the crisis. So I already have these reports and so on. But there was nothing that really like jumped off the page that I was like, I want to, run down this rabbit hole. But fortunately, one of my colleagues came to me with a letter, and the letter was from the stock exchange, and it had been sent months before. I think this is April. Letter was probably from January, I think, and it said that they had noticed suspicious trades on the 3 days before each bank collapsed. It was a pattern common to each bank, where one trader in each bank had basically bought all the market volume on those days. So the buyer was
of the bank shares
of their own shares, yeah, and that jumped out at me, and I wanted to know more about that. I said, "This is really this they could do? They thought they could get away with that? I mean," and so we had to confirm first that these were the traders. These were the proprietary desk traders, which they were in each case. And I just wanted to find out a little more about this behavior. I wanted to see when they started. Was it just these 3 days, or maybe they started a week before? Because the whole world was nervous after the Lehman collapse. I could see a lot of excuse for shady activity like this in those weeks. Everything was crazy. So I wanted to see so I got trading data back to the beginning of September. But what I found, which is pre-Lehman, what I found is that it was more or less the same. These guys had been sitting on the buying side of every trade as it came across the exchange. What we later found out is to do that, they would have come in the morning and set up a so-called iceberg order. And they would just put in a buy. Like, let's say the stock was trading at 35. They would put in a buy at 35. They would buy 50,000 at a time, and the full size of the order would be 5 million, something like that. So they would just, they basically guaranteed a floor for the price for the whole day. So they would come in and do this every day. We started looking at this, and it went back it went back at least through September. So then I said, okay, give me 6 months of trading data, because I thought it must have started earlier in the financial crisis. But the same pattern held back to April of 2008. And indeed, the pattern held all the way back to 2004. So all the years of this boom, while these banks were doubling in size every year, they were doing it on the back of their positive share price performance, which they were themselves guaranteeing on the exchange with the money that they had just borrowed from the wholesale debt markets.
Yeah, I mean, it's quite astonishing. I mean, I mean, it's like a total fraud, but it went on for years and years and years, right?
Yeah, and in fact, as I was putting the finishing touches on the book about a year ago, on my book, I learned that it went back to pretty well in court testimony. Some of the traders' defenses, traders who had come in and started doing this behavior in 2003, they defended it by saying this behavior went back to 1998, when the banks were still partially government owned. They had been privatized between 98 and 03. So like in 98, some of the shares were floating on the exchange, but most of the shares were still held by the government. So even during that time, they were intervening pretty routinely in the market to set their own share price.
And I mean, this was just, if they hadn't done that, I mean, would the shares not have gone up anyway? They were, I mean, they were growing.
I think if they hadn't been able to do this, we would never have had an Icelandic banking boom or any problems, because these banks were very sleepy. One of them is called one of them was called the Agriculture Bank, Búnaðarbanki. One of them was called Landsbanki, as you mentioned, the Lands Bank. The other bank was basically serving the fisheries. And this is a small economy, as you mentioned. So, I mean, and these were sleepy, small institutions. I think a key piece, so definitely you can't discount their ability to access capital on the debt markets. That's what ultimately drove their balance sheets to double, was that, the Germans and others were willing to lend them almost unlimited money. But I think you have to look at this also in the context of the shares, because whenever they do a debt prospectus, they're always talking about how great their equity performance is. One of the banks was dual listed in Stockholm and Iceland. So they had to have two traders, one to keep the Stockholm price up and one to keep the Icelandic price up, and they had to keep them in line. And famously, this is also in the court documents, famously one of the traders oversleeps on a summer morning, and Stockholm opens 2 hours earlier than Reykjavik in the summer because of the time difference. And he misses the Stockholm opening. He gets a call from, he was the CEO, the president of the Icelandic bank, because the bank was by now global. There was a global CEO, but he was the CEO of the Icelandic bank. Calls this trader up and says, look, man, the price is down. I think it was a couple %. Where are you? You need to get in and start entering these trades because Stockholm is slipping.
I mean, they wouldn't even allow the price to go down by a couple of % on a day.
I think they knew that if it started to go down like that, I mean, look, it did go down. If you look at the graph, the peak was in November of 07. And then I think despite all their firepower, they could not keep it up at those levels. They did let it come down, but not enough, because between the last day, but the day before the collapse, the stocks still had the same value as they had in 2006. So they had gone up since 2006, back down, and then in one day they just fall off a cliff, and you have this 97% drop.
But the pattern, I mean, share prices, tend to be quite volatile.
Mm-hmm.
If they were supporting it every day, it wouldn't have been volatile. It would look really strange. I mean, why would nobody have spotted that? Seems bizarre, right? Well,
it was going up in a nice straight line for a few years, more or less, and everyone loves that.
So, I mean, yeah, I haven't actually looked at the share price chart. It's always difficult to get data on companies that are no longer quoted, and it's my system doesn't actually have those. And
do you want me to try to pull it up while we're talking?
Yeah, if
Let
you
me see
got
what I
it,
can find here.
be quite
Like,
fun.
yeah, let me try
But,
to pull this up. Go ahead. Keep asking though, and we'll see what
I
I
mean,
can do.
it's quite interesting, what you're saying, because these three banks were giants relative to the size of the country. And we had a similar thing in Scotland, didn't we? Because the Royal Bank of Scotland was one of the largest banks in Europe, one of the largest banks in the world, actually, but one of the largest banks in Europe. And Bank of Scotland was kind of trying to emulate them. The Royal Bank was pursuing growth at any price. And I guess that let me. Oh, right. So you've got.
So this, can you see that now?
I can see that. Yeah.
Okay.
All right. So they have had periods of going up and downs. It wasn't.
Well, uh, but look first. So there was a little .com bubble there in Iceland. So that takes you. So in late '99, early 2000, you see it goes from 1,000 points to almost 2,000 and then back down. That was a crash already that people still talked about when I moved there in 2004. But then look at what happens between the currency. A big piece of this also is that the Icelandic krona, which had never been tradable outside Iceland, was suddenly made tradable. I want to say in '02, and with a little bit of a lag, you see that starting in late '03, you have an almost straight line up for several years, and that takes you to the beginning of '06. The beginning of '06, we had, to my mind, was the real crisis. They call it now the mini crisis. But you see, that's quite a big crisis. That's a 20% fall in shares in just a couple of weeks. That was painful when that happened, and the currency dropped 20% at the same time. So that was a big deal when that happened, and that was the time.
What caused that? Do you know?
Yeah, there was a number of critical investor, credit analyst reports.
All right.
Around that time, and they called into question these banks were extremely interconnected with cross shareholding, and they had really low loan loss provisions compared to the European mainland banks. There was a number of red flags that came out, and also the IMF that summer came out with red flags for the whole economy, and that would have been the time for the banks to pull back. But there was no appetite to do that. By this point, the banks were driving the country. And they were, and at this point is when they started, as you alluded to earlier, the wholesale markets kind of closed to them in Europe in 2006. So they had to find new sources of funding. So they went further afield. They went to Asia. They went to the U.S. So a lot of U.S. pension fund money went into these bonds. But they also did, as you alluded to, retail deposits in the UK and the Netherlands.
Well, there were most attractive interest rates on offer in
super high.
Some of the local authorities
Yep.
were giving them deposits. Local authorities notorious for being the people that lose money.
Yeah. Super high interest rates, and that pulled in, like you said, I think it was 4 billion British pounds in a short time. So they had that funding source too. But as 2000s, and they continued to climb through 2007, even though I don't have this in front of me, but if you compare this to the global banking shares, for example, they already start to drop off in early 2007. These banks continue to soar toward the end of the year.
Well, that's great. Thank you for showing that. That's a very cool chart. If you stop sharing your screen, because then we'll go back to the.
Yeah, I'm trying to do that. There we go.
So
yes,
the parallel with the Royal Bank. I mean, obviously the Royal Bank wasn't fraudulent. It was just ego-driven race for growth by people that didn't really understand what they were doing. In this case, people obviously had a very clear understanding of what they're doing. What I find fascinating.
Well, but actually, I wouldn't say that they did have a clear idea what they were doing. I think that the CEOs, some of the CEOs were getting daily reports about the share buying. But but the line employees who were doing this stuff, based on everything I saw as an investigator, I think most of them had no idea that
But
they
the
were.
people that, I mean, the people at the top were committing fraud. I mean, they
Yeah,
knew
yeah,
what they were doing. A thing that fascinates me is that, I'm reading Dan McCrum's book about Wirecard at the
yeah.
moment,
I have
and
that. I have that on order. I'm looking forward to that.
it's a great. I mean, like yours, it's a great book, and the story about the unraveling of the detective work is. But what I find amazing is how long these people can carry on with a pretense, and why nobody asks the questions. And I think in your book, you mentioned the banks were at one point paying 15% in Iceland for dollar deposits because they couldn't access.
Yeah, that was that was in the very last week or so. That was
Oh,
when
right.
things were super desperate. Yeah,
All right.
yeah.
But I mean, there were lots of signals. Um,
Oh yeah.
I mean, I can remember. So the one of the Icelandic banks, I think it was Thing, bought Singer,
Mm-hmm.
the stockbroker in
Mm-hmm.
London. We were
Mm-hmm.
like, well, why are they buying this? And the people that in the broking firm were like, well, what do these Icelanders know? And there were a couple of Icelandic entrepreneurs who were busy buying up all sorts of retail assets in the UK. So I think it was Bogur, was it
Yep. Yep. Baker. Yep.
Johannesson? I
Yep.
forgot his name.
Yeah. Johan Ausgert. He was buying. He was on a buying spree,
Yes.
largely financed because these banks they needed to make loans to someone, and he was one of the ones that took a lot of loans because they were growing so fast. Um, they needed to do banking somehow. They needed to lend, and in the early years they lent into these private equity style deals in Iceland, but there's just not much in Iceland to consolidate. So they consolidated a home improvement chain and they did some other M&A type stuff, spin-offs and things. But they rapidly ran out of runway in Iceland to do those things. So they had to keep doing ever more exotic things abroad with the money. But the main thing they did with the money, especially at the end, was they needed to hide all these shares that they had bought illegally on the market. And sometimes it was hundreds of millions of British pounds worth of shares that they had accumulated in just one reporting quarter. And by the time the books closed, they couldn't have those on their. They were way over the legal limit in some cases for flagging these shares but they sort of interpreted the law. They're like, oh well, we only need to flag if it's true at the end of the reporting quarter. So there was always a scramble, just like in Enron at the end of the quarter, to shore up the books. And what they would do is they would create in some cases offshore firms in the names of their clients, and they would stuff them full of shares, and then the bank would make a loan against the value of those shares with no haircut. So if they had 100 million British pounds worth of shares to get rid of, they would create a shell company in the BVI, and they would just park the shares there off their balance sheet, and they would increase their loan book by the 100 million. And they would. One of my colleagues got really into. He was investigating. He's in the book as Binny, is his name. He was really into investigating these shady loans. So this was the back end of what I was investigating, because these loans they had to do them at the end of the quarter. They had to get these shares off their books, but they did actually have credit committees and they had loan procedures, and they had to always run around those at the end of the quarter to so they would have the CEOs would just sign these things off personally, in some cases, to park these shares.
So, did you have any involvement with the auditors? Because, I mean, creating new subsidiaries offshore in the BVI.
Well, they weren't subsidiaries because they would put them in the name of a client. So they would pretend that they weren't affiliated to the bank at all. That way they didn't have to be consolidated onto the balance sheet. Of course, they should have been.
But okay, so I could see how you could do that, but there'd be legal fees to be paid.
Mm-hmm.
I mean, presumably, the lawyers must have known what was going on.
A lot of that. So one thing that was very useful for them is that each of the three banks owned fully owned a Luxembourg subsidiary bank. And most of those type of things were structured there, in my experience. So Luxembourg Private Bank had private banking clients, many of which were also Icelanders, wealthy Icelanders. And these clients had been induced. The first place they parked all these junk shares was with their own clients. So these clients had been induced to, taking their own money and buying bank shares with it. But when they ran out of money, they would then create ways for the clients to do it on leverage, or later to have these companies. So in some cases, the clients said they didn't know the companies even existed in their names. And so that was a big part of the scam, and that like you said, that took a lot of resources. There was a Luxembourg lawyer who was always selling these guys new companies. Probably very happy for the business.
Yeah, I'm sure it'd be very profitable.
Yeah.
And did all three do exactly the same thing?
With variants, they had local color. They each had their own ways of doing it. So Kaupthing, the biggest bank, was also the pioneer. They're the crookedest, the biggest, and the other ones felt like they had to follow what they did. Even I felt that when I was at Landsbanki, we thought we had to follow what they do. They were always the leaders. They used mostly offshore companies in the names of clients. But Landsbanki, where I worked, they had a really funny system where they also had offshore. They had created their first offshore company in the year 2000. That's before they were even fully privatized, called LB Holdings. I want to say it's 2000, maybe 2001. That was an offshore company where they were parking shares in themselves as early as the year 2000, 2001. And they said they needed to do this. Get this, because I know you're a former hedge fund guy. Imagine this rationale. They said that when their employees were being granted stock options as part of their compensation package, they told the regulator, we need a place to park these shares for 5 years or something until these options come due, and then we'll cash out. But meanwhile, we'll finance this offshore parking lot of shares. And so they ended up with, I want to say 15% of their shares were parked in these offshore vehicles with the stated aim of covering employee stock options, which of course, when those come vested, they can just create new shares. They don't need to park them for years. And so that was a funny one. So they had a 15% offshore ownership, and those shares had to be voted at the AGM by someone. So they had a bank employee who was like I forget what he's called. I mean, in Icelandic, he's the Umbodsmaður. It's like the guy who sees about this for them. But he was a bank employee, and he got to vote these 15% of the bank shares.
But that was all on the balance sheet, and
no, it was off the balance sheet.
Sorry. Did you speak to any of the auditors? I mean,
I never did, and this gets to jumping ahead to the end of the book here, but that was definitely on my list, as well as the stock exchange and as well as the many smaller banks. There was it wasn't just these three large banks, but there was all these B-list financial institutions, these including local small savings banks that had been corrupted in these years of greed. And we never got to look at any of those. The investigations were, including into the auditors, everything around that was kind of shut down in just really 2 years or so after it started. So the tragedy of the book is that we could have done much more. And the biggest project for me was to we wanted to make recommendations to the Parliament on changes to laws, and we wanted to make recommendations to ourselves, the regulator, on changes to regulations so that none of this could happen again. So we had just kicked off a big project about lessons learned from the crisis. And that was all just swept away. That document was never written.
I mean, I feel sympathetic towards you, but I suspect that won't make any difference because, making new laws won't stop the next round of fraudsters getting, billed.
Yeah, I guess it wasn't so much about new laws. From my perspective, it was just how to enforce what we have. Because as soon as there was a couple people with some knowledge at the regulator, people who had worked. This is the problem with regulators, and not just in Iceland. A lot of them are just lawyer shops, and they view the markets through the law books, which you need to do, but you also need practitioners in there, someone who's done trading, someone who's done lending, to bring the real world perspective in.
Yeah,
and that's missing in a lot of regulators still.
no, I think that's very true. I mean, interestingly, we've done courses. So, my main business is running training courses for institutional investors. So we've got a forensic accounting course, which has been very popular.
Mm-hmm.
But I've done training courses for almost every financial regulator in the UK, including, even the Civil Aviation Authority, who, grant, if you're a tour operator or you run an airline, they check that you've got sufficient capital. So they've got, a financial, but we've done, and in many, I mean, I've been really impressed, I have to say, with some of the people that we've had on the training course. And I think that in this country, we do try to have, proper regulators. I mean, there seems to be,
yeah, but
Bank of England was one of my clients, it's been very, very good. But you do get the odd situation, like in the energy situation at the moment, where the gas price has gone through the roof, and all these electricity and gas providers who, the whole thing was deregulated. So there's all these companies who were selling fixed price contracts to retail consumers, but hadn't hedged the other end of it. And you think, well, why would nobody ask, why would nobody at the regulator ask the question, so what happens if the gas price goes up? Because clearly they didn't have enough capital. Now, okay, we've had a very extreme increase in the gas price, but that, it's perfectly possible that would have happened without an invasion, a tragic invasion of Ukraine. I mean, the gas price occasionally does spike. And, if you have a very cold winter and not much storage, and of course, we've allowed Centrica to close the Rough storage field, which is like an absolutely crazy decision. But obviously, it's a crazy decision from the perspective of the UK's energy security, apart from the crazy financial decision by idiots that run Centrica. But the in general, regulators here aren't that bad. But I think it's a great point that we should have more practitioners involved.
Yeah, go ahead.
Sorry, go ahead.
Well, I said more practitioners, and also, if you're serious about regulating, you need to incentivize the regulators to bring in a few big cases a year. And then currently, in my experience, there's no incentive for that. Like,
see, that's quite interesting.
You're going to get the same salary if you check some boxes and bring in a $20,000 insider trade as you do if you bring down a $10 billion fraud. So that structure. So the industry that they're regulating is driven on cash incentives, but there is none on that side, which I find a horrible imbalance. There needs to be a way to match those things. That's
a very, very interesting point. I mean, in the book, you come across as quite a committed person. I mean, I don't think many people have had the interest and dedication to pursue the evidence as diligently as you did. Just tell us a little bit about, I mean, how much were you earning? How many hours a week were you working? And was it the injustice of it all? I mean, I know you'd had, and tell us a little bit about how hard times were. Is that what inspired you? Or?
Yes, we were in the process of losing our house, which we did lose. And we, especially before I had the job at the regulator, we were just thinking about how to buy the next food at the grocery store. Wow. And even when I had, because the currency had lost half of its value, the UK had listed Iceland as a terrorist organization for several weeks, which froze money transfers into the country, even for legitimate things. So yeah, it was a terrible time, and it lasted for several years. In fact, I left Iceland in 2012 and it had not recovered. Um, so yeah, it was, if you lose your livelihood and your life, what you thought your life was, I mean, and I had the pressure of family and friends around me when they said, um, they asked me what I was doing for work, and when I told them, they said, "Go get him." They were just really like, they would tell me, your job is really important. Also, the fact that there had been so many people that wanted this job, and also the fact that for me it felt like a dream job at the time. It just felt, like I was the one man Enron task force or something. It felt like at times, and that was cool. It was very stressful because I always needed people. It took about a year to get a team to support me, and we never had enough people to do the cases. We had our pick of the best people at that point, but we never had enough budget. Funnily, the banks control the budget of the regulator. And now it was these 3 zombie banks that had collapsed in the largest share price manipulations of the world history. And they were controlling if we could hire more investigators or not. They had to approve. Anyway, so that kept me going. I was working for almost nothing. Let's see. After taxes, maybe under 1,500 British pounds a month.
Correctly. So that,
and
I mean, so that's under $2,000 a month for the
yeah, because yeah, and Iceland is expensive. Iceland has like Swiss prices, but like Polish salaries, and still does today. And so yeah, so it's not for the monetary reward, but again, there was nothing else to do then at the time anyway. I mean, this was the best job there was.
No,
of course. And yeah, and I was just working very solid hours. I mean, solid 10 or 12-hour days, sometimes weekends. Just trying to get ahead of this wave of criminal cases.
Thank goodness you did, because Iceland has more people in jail, or sent more people to jail, than I think any other country in the world. Probably more people than the United States, I suspect, that as a direct result of the GFC.
Yeah, I think the US was 1 or 2, and these were kind of low-level guys. We really went after our strategy was the largest bank first and the highest people first. Or obviously if we could prove, but the proof was pretty easy. But the narrative in Iceland is complete. I mean, my book is not welcome in Iceland, at least with the elites of Iceland today. Because the narrative today is like, we were too hard on these guys after the crash, and because it's these guys who are setting the narrative. We were too hard on them, and we had a great banking system, but Lehman took it down. And we spent too much effort on these investigations, which didn't get us anything.
Well, hopefully, when the Icelandic version of your book, Iceland's Secret, the untold story of the world's biggest con, when the Icelandic version comes out, matters will be set straight in Iceland. And I mean, this is dying to be made into a film. Is it going to be made into a film?
So I'm in discussions now about a TV series.
Oh,
which would be like a dramatic TV series, 8 or 10 hours. And actually, our common publisher cut quite a bit of the book. There's even more juicy stuff in the original.
Oh, really?
And we would, and we would like to. In fact, the book used to open on Wall Street. We would like to introduce those back into the TV version.
Oh, fantastic! So
and also I have interest from a documentary filmmaker, so we might have both.
I really, really look forward to it. Before we go, where can people find you if they want to find you, Jared?
I'm on Twitter and LinkedIn.
What's your Twitter handle?
It's Jared_Bibler. I think you just look for my name, Jared Bibler, and you find it.
Okay, and what are you doing these days?
I mean, I have to make money somehow, so I'm an independent consultant. I have my own firm called Katla. Right now I'm working, I don't know if I can name the client, but I'm doing a lot of work in sustainable finance policy these days.
All right. Oh, interesting. Okay. Well, that's
So,
so if you want to find, if you've got a need for sustainable finance, or if you want to figure out if your bank's cooking the books,
yes.
then Jared is your man. Jared, it's been such a pleasure talking to you. Thank you very much.
Thanks so much, Steve. It's been a pleasure.